we started CityPlat in 2019. So pretty much when we started CityPlat, I maybe had, I think, $19, $20 million real estate portfolio. Now 5 years, this in April we celebrated 5 years anniversary for CityPlat. I think we're at $320 million assets under management.
All right. Well, thanks so much for joining us, Nikita. For you guys who don't know, who are listening in, Nikita is the owner of the company that Jesse and I work for, CityPlat Commercial Real Estate. So appreciate you coming out here.
Yeah, glad to be here.
Yeah. Thanks, Nikita. So we just wanted to kind of dig in, like I mentioned to you before recording, our premise is like people who are either beginning in commercial real estate or they maybe already have a residential portfolio and they're transitioning to commercial real estate investing. So tell us a little bit about your story and how you got started. And you have a really cool and unique story.
Sure. I started in commercial real estate when I was still a teenager. In high school, started shadowing a local real estate investor, and it kind of opened my eyes to the world of possibilities in real estate and how basically using the concept of leverage, other people's money, OPM, you can don't really have to have a lot of cash of your own. You can structure creative deals, some of financing and whatnot, and acquire a lot of assets. So, and since I didn't have any money, I thought, okay, that could work for me because, that gives me a window of opportunity to, a door to get into real estate and acquire a significant amount of assets without little of my own cash.
So what was that first purchase like? What did walk us through how that went?
Yeah, so again, I started there in high school, kind of learning about real estate, and ended up buying my first building sometime between, I guess, my senior year in high school and first semester in college, and a 16-unit apartment building. So I started out into multifamily right away. Anything over 40 units is considered commercial, so I guess you can call it a commercial deal. And I essentially wholesaled it to another investor local who I've met, and I think I've made right around $50,000 on that first transaction. And previously coming from living off $100 a week lunch allowance from my family, it certainly felt like almost like winning a lottery, that a huge cash infusion. And I pretty much made a decision that I'm going to drop out from college and go into real estate full time. And that's pretty much been my full-time job ever since.
That's great.
What did you do with that first $50,000 you made? Did you take that and roll it back into real estate, or?
I don't really remember. Some of it, yes. It lasted me probably for a year of earnest money and due diligence costs, and also used it to live off and travel. And so, but yeah, probably more than half of it went back into real estate.
When you went back into real estate, did you go back and, I know you said you started with commercial because it's 16 units, but did you start messing with residential stuff, or did you just dive right into commercial real estate?
Yeah, so a little bit of both. I started learning, okay, what I can do. I kept hunting multifamily deals. So I was doing both, hunting multifamily deals to buy and hold. And as well as I was looking for houses to generate cash, looking for houses to renovate and flip. So I did both of those. I don't remember when I bought my second apartment building that actually held or flipped, but I do remember the next rule, my first rule, commercial building, which I was 19. It was a daycare facility here in Raleigh, 10,000 square feet. And I remember I was getting it on it was going into auction, foreclosure auction, because they had IRS debt or something. So the day I was bidding on the auction, I had two appraisals, one for $1.1 million and $1.2 million. And I got it on auction for $476,000. And again, this is before 2008. So I got a partner because I had no credit, good or bad, so I couldn't get a bank loan. But I got a partner who basically was able to co-sign loan and get a loan. And we got a loan for $530,000. So like 120% of the purchase price. That was crazy times when you can borrow this kind of leverage from banks at the time. Now, of course, you have to put down payments and stuff. But back then it was Wild West, and you can actually borrow above your purchase price from banks. And so we got 100% financing with the deal, and we had a lease. The mortgage was like $4,500. So we had a lease for $10,000 a month. And I felt, and keep in mind, so that was $5,500 passive cash flow on triple net lease. And I thought, like, this is it. Like, this is was probably double or triple what were my monthly living expenses at the time. So I was making 2.5 times my monthly expenses on a single lease. I said, like, I just discovered, the new sliced bread. This is amazing, because that's my ticket to, freedom. I'll never have to work again, and on just this one single building. So that lasted for 6 months, and then the tenant stopped paying rent. So instead of going positive $5,500 a month, I started going negative $4,500 a month. So if you factor in taxes and insurance, it's actually more like closer to $6,000 a month negative. And that went on for about 8 months. And I thought, like, so commercial real estate has two gears, and it's forward, and it's fast moving, and it's backward, and it's also very fast moving. So you can go both ways very, very quickly. So, I've seen people lose fortunes and they're short in commercial real estate, and I've seen people make fortunes. So it can go both ways if you're not careful what kind of properties you invest in.
What did you end up doing with that deal?
So that almost like essentially took me out of business and made me go, belly up. But thankfully, I was able to find a church out of Durham. I sold the building to them, who converted it to their own preschool, and I sold to them for like $725. So I think after paying off bank debt, I walked away at closing with $196,000 in my pocket.
Wow. Okay.
That was my I don't remember. I don't think it was my second flip, but it probably was my fourth, fifth, or sixth flip, because it was a year after my first one. But it was certainly the largest amount of money I've seen. Again, this is 2005 or maybe 2006 dollars, right? This is not the same 200,000 as they are today. Now people talk about $1 million like it's nothing, but back then $1 million used to be a lot of money.
Yeah.
And $196,000 of cash in the pocket was also a lot of money. So so that was kind of my first true commercial building, not residential in nature. For first 5 years, I just was flipping houses and buying small multiplexes, basically quads, 10-unit, 12-unit buildings, 20-unit buildings, 16-unit buildings. I think the largest building was like 24 units, so nothing over 24 units. But I had accumulated about 300 units during my first 5 years.
300, you said?
Yeah, about 300 units across maybe 40 buildings. And then I bought a couple of office buildings, a couple of retail buildings along the way. But that was pretty much what my portfolio looked like.
So were you mostly funding like just a good deal, and then you were bringing a partner, or you trying to keep it to yourself as much as possible? What did that look like?
Yeah, it depends. Like, again, keep in mind, I still was fairly broke and didn't have any credit or credit history or much money. I think I owned maybe $10 million worth of real estate before I got approved for my first credit card.
Oh, okay.
Capital One.
Yeah.
For $500. And because I had no credit, good or bad. And even the loans that I did get in the interim, that I had other people could sign. They were commercial, so they won't report on your credit. Most deals I bought with partners using borrowed funds, unless I could get more financing with extremely low down payment. Like I bought buildings, $1 million buildings with as little as 1,000 down. Okay. A lot of multiplexes in the $300,000 to $500,000 range with as little as 1,000 down.
So you're basically just like locking it up with what you had, and then finding the deals to close it. Yeah.
So I mean, obviously, you can't find this kind of deals on the market most of the time. It's very, very rare.
Yeah.
So they usually come off mailers. And talking, building rapport with the seller, and it's hard to pitch $1,000 down. Offer on. They don't know you, but that's why you really have to focus on people in this business. So it's a people's business, and when you form a relationship with a seller, and sometimes it takes years. It's a slow dance. People want to get a girl upstairs so quickly these days, but I'm more maybe old school mentality. I'm more about building rapport and doing slow dance with the seller, and then when they feel like you know them, they know you, then asking a question: Hey, will you sell your building to me? And by the way, can you also lend me money to buy it from you? It becomes a much easier proposition, much more easier, because I feel like they know you, they trust you. It's all about trust.
Yeah,
people lend money because they trust you.
So if you were to go back, like looking at all the deals you did in your first 5 years, somebody just brand new starting out, or maybe they have some residential stuff, would you recommend them kind of taking a lot of those lessons at the beginning with the residential stuff, or would you go right into commercial real estate and just go after it?
I want to say go right into commercial just because it's same amount of work but much bigger payouts. Obviously, commercial requires more capital and more sophistication a little bit, but I would invest time to learn commercial game quicker because again, it's same amount of waiting period. Time is a great equalizer, right? It's an equal race minute one. You and I get up in the morning, so is Elon Musk and Richard Branson. Who's going to win the race? Is it you or Elon? Well, you both have exactly 24 hours a day at 9 o'clock in the morning. So it's how you spend your time. If you buy real estate, residential or commercial, it's a slow game, right? It gets rich slow, not get rich quick, right? You have to buy it and you wait for appreciation, you wait for rent escalations, you wait for your mortgage to be paid down. And if you're going to have to wait, 10, 15, 20 years until you really realize the value out of the assets you bought, would you rather, once you put it in motion, would you rather have it on a $10 million asset or a $500,000 asset? If you're going to have to, once you set up it correctly where it pays for itself, you just have to keep up with it, make sure it stays rented because essentially your tenant's paying your bills, right? Then I'd rather be the one that's $10 million because it's going to be a big payout at the end, much bigger than a residential one. But also higher barriers to entry. But again, if you're not using any of your own capital anyway, then you might as well learn commercial game much quicker.
That makes sense. You're spending the same, roughly like you told me, you're spending the same amount of time on residential or commercial deal. It's just putting the puzzle pieces together.
Yeah.
Yeah. What asset class, if you could pick and choose, starting out brand new, because I know right now CityPlat's buying retail and industrial, but is that what you go after? Would you go after the multifamily stuff?
So I've experimented with all asset classes, from medical offices to student housing to everything in between. My current favorite asset classes are light industrial, small bay industrial, shallow bay, whatever you call it, flex. People have different names for it, and as number one choice, and neighborhood retail, unanchored neighborhood retail, strips. That's my number two favorite category. That's what we're mostly focused on right now. But really, it doesn't matter which asset you pick, as long as you know that asset class better than any person on planet Earth. You have pick any asset class and pick a territory, and you better be the number one most knowledgeable guy in that asset class, in that territory, in your market. That's when you're gonna have extraordinary results. I've seen people who kind of know the entire county, who kind of know the entire MSA region. I'd rather a 5 block by 10 block area of your city. Maybe it's an industrial park, maybe it's a neighborhood if you're doing residential, right? Know that 5 block by 3 block area better than any person on planet Earth. And I guarantee you can make more money in that little segment than some people trying to, going all over the town or go all over the state or go all over Southeast hunting for deals.
That makes
specialization sense. And being an expert in the area usually yields, from my experience, disproportionate yield and return on your time and money.
That makes sense.
So you talked about during your learning phase, right? If you were to go back, would you do that as a broker, or would you do that would you work a 9 to 5 and then kind of do something else on the side, or what else? How does that look like for you?
So I didn't get my brokerage license and really haven't started doing brokerage until maybe my 6th year in the commercial real estate investment game period. Because again, I got my license probably 3 years into it, just so I can get educated on laws and just be familiar with the terminology and things like that. But I haven't really started practicing brokerage until probably 2010, after the 2008 recession. Brokerage is a great way to create income. If you're a good broker, know what you're doing, you can. It's not like Harvard Business School did a study on all real estate, on all professions, medical, tech, everything. And they considered from these parameters the education requirements, capitalization requirements, years in school, office space requirements, and they put all of that in a blender. And what came out of it, the number one best profession to be in, from is real estate sales. Because for $400 and 4 or 5 weeks of classes, you can have your license.
Yeah.
And it's absolutely nothing for a residential agent to sell 8-10 houses a year and make over 100 grand. Absolutely nothing. And commercial, you can sell 8-10 buildings a year and probably make close to $500,000 to $1 million, right? And if you're a good agent, you're probably going to sell 30-40 buildings. And, if you're in residential, that equates to probably $500,000. If in commercial, it probably equates to $2, $3, $4 million. And I know a lot of guys here in our local market who make $2 to $4 million a year doing brokerage. So brokerage is a great way to create income, so you can live off while you're building your portfolio. But at the end of the day, the only way you can build wealth is by holding to properties over an extended period of time. You have to own the properties over a period of time because you don't know when the spikes of appreciation is going to be. And real estate is a hedge against inflation, right? So money, again, as I said at the beginning, $1 million today is much different than $1 million 20 years ago. The way you protect against that inflation is perceived value of money is by owning real estate or other fixed assets, right?
Yeah.
So you have, as long as you take the money you make in brokerage and you invest it and start buying properties. So even if it doesn't cash flow, but at least just pay for themselves, just get in the game, get in motion, have some assets. That's how you're going to build your balance sheet eventually. One of my favorite exercise to do is at the end of every year is look at all my amortization schedules on all buildings and see how much money I've made by just pure fact of hanging on. Because we deal with a lot of bullshit day to day with property management and tenant turnover and, things happen, and it's a fight to constantly, keep buildings full and to, make sure you able to cover your obligations and that and things like that. So, and sometimes you will not make any cash flow on some buildings, right? But doing this exercise, looking at the amortization schedule, it's kind of makes sense. Like, okay, I've gone through a lot of BS this past year, dealing with these properties, and I haven't made any cash income I could actually put in my pocket, no cash flow, but how much might I have made by just hanging in there? And it will be, once you have compounding a lot of buildings, it's the number becomes astronomically
It's powerful.
eye-opening, where you realize you made several $1 million just by hanging in there, and that's what your reward for dealing with all the day-to-day bullshit, right? Even if you're not making any cash flow or cash income. So one of my favorite exercises is to do that. Yes, once you own buildings, even if they don't cash flow right away, right? You're building up your balance sheet, you're building up your equity, you're building up your net worth. And eventually, if you take care of your buildings, those buildings going to take care of you. So yes, brokerage is totally fine. I'm a licensed broker. We own a brokerage company. I have great respect for commercial brokers because it's a lot of hustle that goes into that business.
Absolutely.
But again, as long as you don't spend it all on porting or whatever your desires or wants, and you reinvest the proceeds and profits you make, eventually you're not going to have to do brokerage anymore because you're going to have enough passive cash flow to be able to replace your brokerage income.
Yeah. So you said you didn't get your license until the 6th year. Everybody kind of says that the first 1 to 5 years in commercial real estate is the hardest. What's like some stuff that you can do to stack the odds in your favor to survive that first 5 years?
Well, so that's probably why I haven't grown as fast as I could have had, because I had to take money out of operations, let's say I would do a flip and make make 50 grand on flipping the house, and I would use that money to live off, right?
Yeah.
Instead of putting it back in the kitty. Just had a meeting with somebody where I'm part of a mastermind where it's a lot of very successful individuals, not a lot, but a handful of people, and average net worth is $100 million plus in the group. And there was one guy who was doing his presentation on his current portfolio, and he started in real estate much later than I did, in 2012, as a matter of fact, by flipping houses. But he had a source of income elsewhere where he had the need to take money out of the operating business, and he reinvested 100% of proceeds. He started out in 2012 with $1 million to his name. Now he's worth $450 million in 12 years. He was able to compound it. I don't know how many fold, 450 fold in 12 years. And he started out by flipping houses, right? Because if you don't take anything out of operations and you reinvest 100% of proceeds, you have the compounding effect. And compounding is the interest is the most powerful tool on planet Earth. So, you might go to the gym and, for a week and you don't see any results in the mirror. But if you go to a gym for 3 years every day, you take a picture of yourself before and after, you're going to notice some difference. The same thing if you might eat a cheesecake today for lunch. And if you eat it today and tomorrow and day after tomorrow, you're probably not going to see any results in the mirror. But if you eat the cheesecake every day for lunch for the next 3 years, I guarantee you take a picture now and 3 years from now, and you're going to see a big difference. So that's the power of compounding interest, right? The same thing applies with finances and, taking money out of your business. So to answer the question, because I didn't have a source of income, such as brokerage,
Right.
I had to take money out of operations. That's why my growth hasn't been as astounding as it might look to some people. It hasn't been as what it could have been, because I had to constantly take money out to maintain a lifestyle, to pay for living expenses.
Right.
Had I had a thing like brokerage income or other source of 9-to-5 job, which I don't recommend, by the way, but if you had that, then where my basic needs would have been taken care of, and I could have reinvested 100% of my profits from real estate back into real estate, my growth probably would have been much quicker. I would have started using my own money much sooner, which would lead to further compounding. And again, that's why real estate is such a powerful vehicle, especially commercial, because everything is income driven and revenue and expense driven. And you apply cap rates on the revenue or expenses, and you're going to have a compounding effect on your valuations. If you have a building, an apartment building that has 35% expense ratio, and you increase those rents by 10%, take it from $1,000 a month to $1,100 a month, the compounding effect on your NOI is going to be 14x. It's not 1-to-1 ratio. It's not 10%. It's 14x, because by you increasing your income by 10%, you don't increase also your expenses by 10%. Right. So your expenses are, a third of it. So your 14 and a half times you increase your NOI by basically you increase your NOI disproportionately to your to your rent increase.
Yeah.
The same thing with expenses. You reduce your expenses, it has a big effect on your NOI. Maybe I'll need to do a presentation one day to demonstrate the compounding effect on NOI by reducing expenses or increasing rents.
Yeah,
It's going to be an eye-opening exercise.
That'd be cool to see. So you started, like you said, around 2006. Now, almost 20 years later, it's 2024. What does your portfolio look like now? I know you have a kind of a personal portfolio, and then you have CityPlat, your company's portfolio. Yeah. Break down those two different portfolios.
Clarify. I started in 2004.
2004.
So today is actually, this year is my 20th year in the business. Again, so to give you a little history, so I started by buying multifamily and small commercial. Then going through 2008 recession, I had to sell most of the stuff to keep me from bankruptcy. So in 2010, that's when I started doing brokerage. It's pretty much because I had to liquidate most of my stuff. And I started again from ground zero essentially in 2010. And for 3 years, I just did nothing but brokerage because I was still recovering from the recession. In 2013, I've started, I realized that the only way to build wealth is by owning properties, but I started doing development work where I was developing subdivisions, entitling land for multifamily, flipping to apartment developers, doing more stuff like that. Again, more transactional to generate cash. Because previously, my first part of my career was asset rich, cash poor. Constantly would just buying properties, but I constantly had little cash. So now I wanted to get, high up on liquidity and didn't really care before I start buying assets again.
Right.
So I did that for about 5 years. And I really haven't started buying and accumulating assets again to hold until 2017, 2018. And we started CityPlat in 2019. So pretty much when we started CityPlat, I maybe had, I think, $19, $20 million real estate portfolio. Now, 5 years, this in April, we celebrated 5 years anniversary for CityPlat. I think we're at $320 million assets under management. We have very low debt. I think our global debt coverage is like 34%.
Okay.
If you factor in prep equity, it's at 49%. But as far as institutional debt, it's at 34%. So I think we're in a good leverage position. And overall, that's portfolio size. Our goal, we want to be about 10 million square feet of industrial and 5 million square feet of neighborhood retail by 2030. So that would equate to roughly $2 billion portfolio. So we need to grow it 6 times over the next 6 years. So
And what's the reasoning for, I know the reasoning, but what's the reasoning for the small bay retail, small bay industrial?
it just looking at all asset classes and having experimented. The reason I shifted away from like multifamily or other asset classes like full service office buildings. I'm a father now, and I have a daughter. I want to spend more time with the family. So it's more of a time management perspective. I want to focus on deals where it's tenants take care of all the maintenance and all the upkeep and all the repairs. They don't have to bother me. In multifamily, if there is something happens, you have to take care of everything. And yes, you can hire management companies, but still, it's less predictable because your expenses are not predictable. On triple net leases, when your tenants take care of everything, it's more your cash flow is more predictable. With full service office places, again, it's inflation goes up, so is all your upkeep, elevator maintenance, janitorial services, all of those things, and your the revenues not necessarily can escalate as quickly as expenses can. And again, it's much more management intensive. So that's why we picked triple net assets. And within those category, the reason why we focus on neighborhood retail, unanchored neighborhood retail, or small bay industrial is because if a 2,000 square feet retail unit or 3,000 square feet industrial unit goes vacant, we can re-tenant it with probably 3,000 or 5,000 potential tenants. For Flex, it's your HVAC contractor, your electrical contractor, your eBay, Amazon distributor, or your
Podcast studio.
Podcast studio like the one we're in right now.
Yeah.
So there's a lot of tenants you can backfill it with, business people, and with minimum rent abatement and minimum TI. Same thing with retail. You have a retail unit goes vacant, 2,000 square feet. You can put back nail salon, cell phone store, your vape store, a tattoo shop. There is 3,000 different tenants you can backfill it. If you got a 100,000 square feet box, whether it's distribution center or the former, Kmart box, right? There is very little tenants who can use 80 or 100,000 square feet box, and typically they're gonna require a year of free rent, a bunch of TI, $1 million in TI allowance, and it's only maybe 50 tenants in the country who can use a box like that, right? If you're talking about national retailers, a lot of them on the way out of business anyway, as we move towards the digital world. So it's more from a risk perspective. So we're more like defensive risk than being offensive from the risk profile. Definitely have much lower tolerance for risk than I had 20 years ago. So when I had nothing to lose. But that's kind of the logic behind it.
And one of the questions I had, so like with CityPlat, you started off with just yourself, and then you joined up with your partners at CityPlat, and now you guys have built obviously a very successful business over the last 5 years, and you have a full-blown team underneath you. So how does somebody go if they want to get into commercial real estate investing and they want to build a commercial real estate investing firm? How do you go from just yourself to hiring a full team and kind of funding that, and how do you build that?
It's the reason behind having a team. And by the way, when we started CityPlat, it wasn't just me. It was also Patrick and Vincenzo that came with me from my old firm.
Mm-hmm.
So they joined. They were there from the beginning. And Jay came on later, but as a partner. But so it wasn't just me by myself. And so the idea behind having a team is we wanted to share. Real estate is a beautiful business, and commercial especially, right? And I'm the beneficiary of it. I'm a beneficiary of American Dream, and I want others to have had the same similar experience. It has the ability to transform lives. It's this ability to take a normal person like me, with no college education, no credit, good or bad, no money, no connections, no network of any kind, who could barely speak English. It can take a person like that and turn them into a multi-millionaire many times over. That's the beauty of this business. So if that guy can do it, then anybody else can do it, right? We just wanted to create a platform where we can have, where we can educate and teach other people how to do it, and give them ability to experience the same benefits that we have experienced over the years from being in commercial real estate. But sometimes it's not really a rewarding job to run a firm, because we don't really make any money on it. It's more of a, to have a place for all of us to have, place to work at, and because you make your money on doing deals, right? You don't make your money on running necessarily a brokerage firm, right? Even if you're number one on top 2 most profitable firms, then maybe you can have some cash flow there, but again, it's nothing compared to what you can make in just one deal. So it's more, we consider running a firm and having a team more of a philanthropic endeavor than money-making endeavor. And we enjoy people we work with, so we don't regret it or anything, but we're definitely looking to change some operations, like some things they end up now taking a lot of time that it becomes cost prohibitive to keep it in-house, such as property management. We thought we can keep it in-house too, but again, we found ourselves spending 80% of our time dealing with property management issues, and that yield us maybe 1% of results, right? And so you want to focus on the 20% that gives you 80% of results, not the other way around. So we're in the process of outsourcing that. And again, you don't need to have a team to build large real estate portfolio. I have friends who own massive portfolios, $200 million, $300 million portfolios, and they have 0 employees. It's just one person. They have everything managed by third parties, and they still have a lot of investors. Like one of my friend in Houston, he has 80 investors, and that everything is handled by property management, and he works 5 minutes a week. He gets monthly reports. He has a forensic accountant who reads the reports for him and says, "Oh, the capex higher, 3% higher on this asset than it was last month." And says, "Okay." So just he stays informed. He doesn't even read the reports himself anymore. And then once a quarter, property manager gives him a list of investors, 80 investors to send payments to on quarterly basis, and he just says, "Okay," and it's sent. That's it. He works 5 minutes a week, and he runs portfolio almost as big as ours.
Yeah.
So it's just a different model, and I would prefer that kind of model actually, because again, it gives you more freedom. At the end of the day, we're doing it so that everybody can have freedom. When you have freedom, you really get to do what you want. You can be, whatever your passions are. Or if you want to be more philanthropic, you have more ability and more time to contribute to those causes. And so I would. It might look sexy and attractive to run a big firm, but it's
a lot of overhead.
It's not. There's other ways to do it that can have you better results.
So with that guy, I know CityPlat, that you guys raise the funds, then you have a pref that you pay, and you split equity according to how much money somebody brings. But if you're a solo person running a big portfolio like that, is he doing the same thing where he's raising money from investors, giving away equity, and then paying a pref, or is he doing it all debt? Or
no, it's the same thing, right? It's just the structure is again very, very similar.
So how does somebody like starting out tangibly do that? You just one deal at a time, you buy?
Yeah, one deal at a time. You're doing it with your multifamily properties, right? You found 2 duplexes to buy and say, "Hey, I have this deal. I found it. I'm going to run it. I'm going to increase the rents. I'm going to manage it. I'm going to double 2x its value. I can get a debt potentially, but I might need a cosigner, or I can get a debt. I don't need cosigner, but I need you to bring in the money. I bring the deal, you put in the money. We'll split it in some fashion, let's say 50-50.
Mm-hmm.
And I get paid for my management work or for my brokerage activities if I do leasing or acquisition because I found it, and you get paid. And that's how a lot of partnerships fall apart because constantly somebody thinks they're bringing more value to the table. One person says, well, I should get more because I found the deal. Without me, this deal won't exist. I should get paid more. The next guy says, well, I'm putting all the money in. You guys just found a little deal, but I'm bringing all the money to the table. I should get paid more. And the third guy goes, well, you just found a deal one time and you just put in your money, which everybody have money, but I'm doing all the day-to-day management work. I should get paid more. That's where the value is. So constantly there is this internal conflict in partnerships, why a lot of partnerships fall apart. So we figured out the way how to basically level the playing field and eliminate conflict in partnerships. And we believe that that's why we have all the fee structures, that everybody get paid for what they bring to the table. You found a deal, you get paid acquisition fee. You're doing the management, construction management or asset management, you get the asset management fee or property management fee or whatever, depending on what you do, right? You providing the money, you get paid what private investors get paid. You get paid preferred return on your money. And once everybody get compensated separately for what they brought to the table, you signing on that disproportionate to other members, well, you get that procurement fee or that guarantee fee, right? So and once everybody get compensated for the work they bring to the table, the market rate compensation, then it equalizes playing field where now we're all equal. Now you cannot make an argument like, hey, I'm bringing all the money. Yes, but you already got paid for that separately. Yeah, I'm doing all the management. Yes, but you got paid, management or brokerage commission for that. Right. So then it kind of levels the playing field and it's more like equal. Okay, we're 50-50 together or we're 70-30 or whatever.
Okay. And that's going to be different every deal?
Sure. It's different every deal, and depending how big it is and, how many people you can go to. Obviously on $1 million transaction, you can go to a lot of people. If you're doing a $100 million transaction, then it's there are fewer people who can write a check. Let's say you need a $30 million equity check. Much fewer people can do that than somebody writing a $300,000 equity check.
Yeah.
So then you probably have less negotiation. That's why sometimes we do syndications, so that we're not limited to somebody dictating rules on the if they bring all the equity and they know that we don't have a lot of other options, they can have a stronger negotiation position. If we're syndicating it with a bunch of people who are putting $100,000, $200,000, $500,000, then it's more, we can stick to more of our typical deal structure, right? And because there's a lot of people, not a single person, calling all the shots.
Going back to talking about CityPlat and how you guys built CityPlat and where you're at today, one thing we're trying to do together with the commercial real estate investing is building like a personal brand or a brand associated with what we're doing. So, with this podcast, for example, we're trying to get the word out there that we're trying to find commercial real estate deals. I know CityPlat did a very good job establishing a brand in a pretty, a well-known market, Raleigh, Durham. Before I joined you all, I knew what CityPlat was, and I think you guys did a good job with that. So how does somebody go about building a brand or personal brand to help them, achieve what they're trying to achieve?
I don't know anything about brand building. Only thing I need to know is that be authentic, do good work, stay behind your work and, follow through with your promises to people and to investors, to banks, to everyone. And when you do that and you're naturally successful, people are gonna be attracted to you. They're gonna want to know what are you doing and be a part of it. So I absolutely have no idea how to build a brand other than, just be yourself and be authentic, and people like authenticity. And if you figure out a way how to make money, then other people gonna want to learn, and that's how you attract others. And have a good culture.
Yeah, and I think that's what you guys did very well. I guess you're just very authentic, and that's what grew your CityPlat brand.
Yeah, I think that's powerful. I think that authenticity is sometimes hard to come by in this digital age. So But something I wanted to ask was, we're talking about acquiring a lot of properties and bringing in partners and stuff. For us to acquire a retail property this year, maybe even a light industrial property, um, I think seller finance might have to be the avenue for us to go. But if you were us, how would you acquire a retail property this year?
Same way you find value. So you have to know your market first. That's why I'd rather a 5 block by 10 block area of your town better than anyone, so that you know the value of that value. So when things are trading at 180 a foot for this type of retail properties, right? And you get a call of a mailer, or you see a property go on the market and it's advertised at 120 foot, you don't need to go get an appraisal. You don't need to make a contract contingent upon inspections or appraisals, because you already know the values better than the appraiser does, because you know every single comp and you know that it's worth 180 on every day of the week, the very minimum. So you can make your decision executive. And when you have value, when you have a deal that's actually a deal, the money is going to show up to play. Whether it's obviously owner financing is easier because you don't need to look for money. Your source of capital is the seller. Right. But if they say no and you have to go raise money anywhere elsewhere, it's much easier to raise the money when you actually have a deal. The problem raising money, it only becomes a challenge when you have a crappy deal that you're overpaying for, right? When we have a good deal, money is going to show up in your life to do the deal faster than you can blink. Because look, money is a commodity. It's just like any other commodity. If you don't have it, somebody else does, and you can simply rent it. But money wants to follow certain rules, right? And it wants to be secured. It doesn't want to be lost. And B, it's want to be guaranteed of repayment. Show me a way how you're going to repay me, and I'll give you my money, right? So, and how it's going to be secured? Well, you're going to be secured by stock in this building, or this or second lien on this property, or stock in this LLC that owns this building. And here's how you're going to get repaid. We're going to raise the rent to market, and we're going to refinance, sell it, and that's how you're going to get repaid. You can demonstrate a clearer path of security and clearer path of repayment, and you can have unlimited access to unlimited number of funds you can get for your deals, right? There is billions and billions and trillions of dollars everywhere you look, all around you. This country is flushed with money. There is tens of billions of dollars sitting in money market accounts and IRAs, retirement accounts, all over this country at zero interest rate, or nominal interest rates. So you offer show somebody a way how they can get more, and offer a similar type of security. There is no limit how much money you can get access to, because there's literally tens of billions of dollars sitting in retirement accounts right now in your neighborhood. You don't even need to live in your neighborhood.
Do you think there's a way for people to do deals without raising private money? Like, just going slow, like I guess a slower way to build a portfolio?
Sure. Yeah, absolutely. You can do it. You can save up money and buy one building at a time with no partners.
But you're probably not going to scale nearly as fast.
Sure, but sometimes less is more.
Yeah.
And scale is not necessarily bad. Right now, what we're looking is we're looking to sell this year. We're looking to sell maybe $100 million out of portfolio to deleverage even further, because I think we're going to be heading into recession. So trying to be proactive and ideally have no more than 20% debt in the portfolio, and also looking to raise some liquidity, and also syndicate partnerships where we maybe buy out some partnership or consolidate partnerships where we have fewer things to worry about. Because sometimes owning 100 buildings, it's also a lot of work. I'd rather focus on owning 20 larger buildings than 100 smaller buildings, so that I can actually pay better attention to them and do a better job at asset managing those buildings.
Yeah.
So outside of spreading risk, what's some other benefits to having 80% equity in a property?
There is only one way you lose. You don't lose assets by paying too much or by losing a tenant. You only lose assets by over leveraging it. So if you don't owe anybody on your buildings, then by default you cannot lose it to a bank or to somebody, right? If you don't owe anybody, if it's your property. So I just again, if it's going to be the same net result, or you have the same cash flow, then what's the point of owning 100 buildings when you can own 50 buildings that are going to be free and clear? And your cash flow is probably actually going to improve, when you do that.
So what does the next 1 to 3 years look like for you with your real estate investing journey with CityPlat?
Yeah, so focus more on larger assets that have concentrate equities. Maybe sell off some of the smaller stuff that's required the same amount, but just like going from residential to commercial, right? You're doing it so that you can you have better results at the end of the day, right? On your better net effective result on your income statement, right, and your balance sheet. Same thing here is sell a lot of smaller stuff, smaller commercial, maybe under $2 or $3 million, and concentrate equities and focus on larger buildings, maybe 10 million plus assets. So we might only have 30 or 40 buildings to worry about, but they're going to be larger assets, and they're going to be we can do better job asset managing those and maximizing the value out of those faster.
So like you said, less is more.
Yeah, less is more.
Cool. I think that's about everything I had. Do you have anything else you wanted to ask him, Jesse?
Yeah, we talked a lot about like looking for deals off market. You talked about mailers. We really talked about cold calling yet, but what's your preferred method of finding off market deals?
It doesn't really matter. Like a lot of success we found recently is forming a relationship with brokers. A lot of our deals come from brokers, whether it's in-house brokers or outside of the house brokers. And you take care of them well. You protect their interest if they bring you off market deal. Let them get paid commission, and maybe even offer them stock in the deal, so they have participate in the upside, and encourage them to bring you deals. So before it makes it to market, so you're the first one to see it. Once it goes to market, you're negotiating against the world, right? So
yeah,
like the Ollie's deal today. Did you see the one I sent you? It's
No,
one we
I
made an
haven't.
offer on probably 3-4 months ago. Went on auction.
no, went to auction.
Yeah.
So we can, in that case, we can actually probably get a better price on auction. But again, we are working on several major acquisitions right now. So we probably cannot focus on anything else for the next 60 days until we take that asset down.
Are you able to disclose anything about that or not really?
Not really. I mean, there is no need to.
Yeah.
But in general, look, as my friend and one of my mentors, Scott Schill, says, in commercial real estate, it takes one deal, one time, to change your life forever. So I had plenty of those deals in my life, and I'm sure I'm going to have plenty of them ahead of even right today with the portfolio that I have. There's one deal away from completely having a different life, changing my life that can help me get to the different level, right? I'm pretty happy where I'm at right now. I'm pretty satisfied with what I have. I get to do pretty much anything I want, but I can still tell you that there is I can change significantly if I just do one right deal. So in the residential, I don't know if the same formula applies. I don't know if one deal can change your life forever, just because the scale is so small.
Right.
But in commercial, you can. I've seen people make $50 million in a single transaction. And very quickly, right? I've seen people make $70 million in a single transaction on the flip. That took them less than 12 months to execute. And I can guarantee you, if you put $70 million in anybody's pocket right now, it could change their life.
Absolutely.
I'm sure there
Yeah.
are people who it won't change their life, but most of the people will.
I think if you put $50,000 in somebody's pocket, like a lot of people just starting out, that would probably change their life.
Create a cash flow.
Yeah.
It's a beauty of commercial real estate.
Yeah.
A single transaction you can create a cash flow for yourself of $10,000-$15,000 a month on a single small commercial deal that you execute correctly. And 10,000 months, that's a lot of people go to school and spend 5, 6, 7 years of schooling to get very, very good at something, so they can get a job paying 10,000 or 15,000 a month. A lot of people spend a lot of time in school to get an engineering job that doesn't even pay that much, right?
Yeah.
And somebody without even high school education can do a real estate transaction that can create 10,000 per month cash flow. So yes, you're right. There is deals done every day that can definitely give people the flexibility and freedom to have a totally different life than they're currently having.
Yeah, that's awesome.
That's why I love this business, and I think that's why I have a foundation to encourage people to get into this business. If you're a high school student or a college student in the state of North Carolina, I will pay for your real estate license just so that you can get into this business.
That's awesome.
Right.
Yeah.
So, because I believe in it, it changed my life many times over the years, and I want to have other people to have the same experience.
That's awesome.
Yeah.
Great.
Yeah.
Well, thanks so much for coming and joining us, Nikita. What's the best way for people to connect with you? Where do you want them? Do you want them to email you? You want them to follow you on Instagram?
Yeah,
or-
sure. Yeah, it's they can email me or follow me on I don't know social media. I don't really have two active social media profiles, but that's one way to do it. Or just shoot me an email.
Okay.
Okay.
We'll put that information in the description.
Yeah, absolutely.
Awesome.
Sounds good.
Well, thank you so much, Nikita.
Yeah,
Thank you.
Thank you for having me.